morning. You've tuned into ET Now, and this is Buy Now, Sell Now. I'm Karunya Rao with Varun Hiramat, and let's kick off the show by taking a look at the top headlines of this hour. First up, it's a status quo as far as US Fed rates are concerned. The Federal Reserve has kept the rates near zero and says that the economic activity is still not close to the pre-COVID level. So important comments coming in there. Meanwhile, markets back home are looking very steady, well above 12,000 for the Nifty 50. Nifty is about 3% away from new highs. FIIs have bought about 5,400 crores yesterday. Energy and realty indices are the ones which are leading the gains. Pharma and metals, meanwhile, are under pressure. Meanwhile, another check coming in for Reliance Industries. It's in focus on the back of a deal that it struck for Reliance Retail. This one is from Saudi PIF, which is going to be picking 2.04% stake in Reliance Retail. This deal pegs the pre-money equity value of Reliance Retail at 5.48 lakh crores. Meanwhile, on the results radar, we have ITC to watch out for, along with the biggies like Cipla, Vedanta, the Tata Consumer, Bosch and Ashok Leyland as well from the broader markets to watch out for. SEBI, in the meantime, has enhanced investment limit for mutual funds to invest abroad. So some developments coming in on that front. And finally, you have PM's vision. He will make India an investment destination. Modi vows to do whatever it takes to make India an investment destination. Hard sells India. Do remember yesterday we flagged off about that meeting that he had with a host of global investor and the who's who of India Inc. So some comments coming in from there as well. As far as markets are concerned, you have Sensex trading well above 41,400. In fact, it's almost at 41,500 as we speak. Nifty at 12,159. Broader markets also looking resilient. You have small cap index gaining about 0.8%. Mid cap is up 0.4%. Varun.
Right. Let's also bring up the BNSN quiz question for today that we've been bringing you one off every day. So our question to you was, which of these chains dominates the Indian QSR market by revenue? And your options are Burger King, McDonald's, Domino's and KFC. So do tweet to us at the ET Now handle, and if you are one of the correct people, your name will be featured on our channel at 11:45. So you have around 40 minutes which you can still tweet to us. Karunya already did a bit of a market check for you, so I'm going to avoid that. Let's get on board our experts this morning. Kunal Bothra and Ashish Kapoor are both with us. Good morning, gents, and thank you for taking out the time as always. Kunal, coming to you first. Globally, it's been 4 days of a consecutive rally, and the US benchmarks are all up 7% this week. The Nasdaq is up 9%. How is Nifty comparing, according to you? Are we underperforming, or are we pretty much in line? And then what are your high-risk and low-risk ideas for our viewers this morning?
So good morning, Varun. Yes, I think on the backdrop of the global rally which you've seen post or rather during the event of US elections, I think has been extremely strong and positive. We've seen very good, I would say, material rally into many of these sectors and many of the stocks. So right from the defensive packs, even the FMCGs and the pharma stocks individually have seen good rally. To the high beta ones, the metal stocks have rallied. The banking index has gone through a ferocious rally of more than 2,400, 2,500 points in a matter of this in the last 1 week. So I think net it's been a very strong week for the global equity markets. Now, on the backdrop of this, I believe that the stance has to be on the bullish bias side. But then at the same time, because of this sudden rise and steep rise, it's possible that many of the indicators get back into an overbought territories. So I think at these point of times, what's very important is to try and trim your position size. So you can have a long bias into stocks, into the markets, but then the position sizing has to adjust on the slightly lower side. So that's the only adjustment which I think is required in a market like this. But then in a market like this, I would suggest a couple of buy calls. First one is a buy on Bharat Forge. I think that stock looks extremely attractive. In the previous show as well, I had mentioned a buy on Bharat Forge. I believe that the stock is heading towards a inverse head and shoulder breakout. It's an inclined inverse head and shoulder breakout. So would suggest a buy with a target of 505, 510 target range for Bharat Forge. So almost a 20 to 25 rupees upside from current levels, and stoppers could be kept at 475. The second would be a buy on Shriram Transport. I think it's an excellent chart in the making. The last 1 week, the stock has recovered more than 15%, and the last I think 1.5 months from the September end lows rather, the stock has rallied more than 25 to 30%. So I think it's a very strong rally. The stock breaking above its 200 moving average as well. Would suggest this as a buy for a target of 900 plus, and stoppers could be kept at 788.
Ashish ready, and if he's with us, good morning, Ashish. We seem to be in a firm bull run. Okay, I think Ashish is still going to take a little bit to join us. In the meanwhile, while we wait, yesterday Nikunj caught up with Jim Rogers, and he had a lot to say on the current bull rally, and he also had something special to say about gold, silver, and how special metals will perform going forward. Let's listen in.
I don't expect to sell my gold and silver for a long time. I hope that my children have my gold and silver someday. No, everybody should own gold and silver, and I expect gold and silver to do very well in the next few years because there's going to be more turmoil, more chaos in the world economy and in governments and with currencies. No, don't sell your gold. Don't sell your silver. I plan to buy more, when this current correction ends. I hope I get the timing well enough.
Okay, that was Jim Rogers on gold and silver. Clearly, he doesn't want to sell any. But I think Ashish Kapoor is back with us now. Good morning, Ashish. Great to have you with us here in BNSN. We seem to be in a fourth consecutive session now today, fifth, of pretty much a bullish vibe for the market. So in light of that underlying theme, what is your high risk and low risk idea for today?
Well, like rightly said, I think markets are doing much better than expected, and I think you really have to remain on the buy side here. And to that extent, I think I have two ideas. One is a high risk idea, which is UPL. Now, UPL is a company which has delivered fantastic returns for shareholders over a period of time. The price has fallen very rapidly after the results, which were disappointing. And the second concern has been the high debt which the company has. But if you look at the overall picture, it's at the current juncture, it presents a very good buying opportunity, especially for investors who have some appetite for risk. The reason for my bullishness is that one is that UPL, a very large part of the revenues come from Latin America. They are the global leaders in ammonium phosphate and various other chemicals. But a large part of the revenue comes from Latin America, especially Brazil, and the way Brazilian currency has fallen and Latin American economy is in turmoil. So that has affected the results very badly. Going forward, we do expect this to get corrected. Also, they are geographically growing in various new areas. So overall, the impact of Latin America would subdue going forward. Second is the concern for debt. That also the company is very proactively reducing debt and also rationalizing their costs. Both in crop protection chemicals and in aluminum and ammonium phosphate, the company has a very good market share globally. It's a very big, well-diversified player having a lot of presence in various countries, including North America, Europe, and parts of Asia, along with Latin America. So I think the present weakness presents a very good buying opportunity. It is a bit of a risk, yes, because currently the company is not doing well. But if you can have, like I said, if you have an appetite for risk, this is a very good opportunity to enter into a stock which has otherwise been creating a lot of wealth. If you look at the historical trends, it's one of the very good wealth creating ideas. So it is now, because of the weakness, come down to very low levels. In fact, trading at about 30% valuation discount to its long-term average. So very good entry point here for UPL. The second low risk idea is Bharti Airtel, where the stock fell again because of various concerns, but really speaking, the results have also been fairly good, encouraging. ARPUs are also improving. Telecom industry is getting pricing power back. Bharti would always, in my opinion, be the second strong player in this industry. And with very few players left, I think the growth looks very promising, and even the profitability going forward would keep improving. So I think this is the second the stock, and it's a very low risk, because I think given the way the telecom industry is going to grow, and data usage and DTH and other things are going to are very no-brainer that they're going to increase in volume going forward. So Bharti would definitely keep gaining profit and revenue going forward. Yes, Jio would be a good, very strong competition, but Bharti would nevertheless be the good second strong player in this industry. So this is a very low risk idea. Again, the stock has fallen a lot from the peak level. So at this current juncture, it's a very good entry point, and we have a target here of 610, which is a fairly significant upside, and target in UPL can be 580. Both the targets are with 1 year perspective.
All right, Ashish and Kunal, thanks for sharing your ideas with our viewers. Request you both to stay on hold. We're taking a short break here. We'll be back and address our viewer queries. Welcome back. You're still watching Buy Now, Sell Now, right here on ET Now. It's time to address some of our viewer queries. We have Kunal and Ashish standing by to help them out with the same. First up is an email from Garima Dutt, based in New Delhi. She wants to know about Tata Motors. She currently holds about 1,000 shares, which she bought at a price point of 200 rupees a piece. Wants to know whether she should hold or exit at this juncture. She's given a time horizon as well, which is 1 year. Kunal, what is your understanding of the charts of Tata Motors? While yes, given the kind of decline it saw, it almost reached those 80 odd rupees, 63 or 64 rupees odd 52-week lows as well. It has significantly improved from there. It has more than doubled. But given that the buying price of the viewer is 200, would you recommend that she waits for some more time and acts patiently?
Absolutely. I think the viewer over here has to wait patiently on Tata Motors, because I believe that the stock trend is just about now in evolving stages. Now, in just the morning, I did a chartbuster segment on Tata Motors, and I indicated that there is some short-term pattern breakout as well. The last time we had a similar breakout for Tata Motors, we saw a potential rally of almost 50%, 45 to 50% in a matter of just a couple of months. So if a similar kind of a chart pattern gets confirmed and broken out on Tata Motors yet again, then you can probably expect a strong upside coming into Tata Motors over the next couple of months. So on that backdrop, I would advise the viewer to try and average out your holdings on Tata Motors. Try and bring your cost price to as low as say 165, 170 range. I think if that's possible, and if you can put in that extra cash, then I believe that there is a strong possibility that if this short-term pattern breakout happens for Tata Motors, you would get back at least to your cost price, very quickly. So to your net cost price very quickly. So my advice would be to hold on to your investments on Tata Motors and let this chart pattern play out. Near term, I believe that if this target plays out, if this pattern plays out, then a 175 to 180 plus target range in the near term could be a very high possibility.
Okay. All right. Ashish, are you equally upbeat on Tata Motors prospects fundamentally as well, given the way the company has started to witness a turnaround in terms of their financials? Finally, things are looking up for PVs as well, and CV will also cyclically come around at some point.
Yeah, I think Tata Motors, the worst is behind us. The company is restructuring its operations on a very positive path to reduce debt. Debt has been a major concern. They have an ambitious plan on becoming debt-free by FY22. And I think once the debt levels reduce, then the operation of the company become much better. Also, globally, I think where the things are definitely coming back to normalcy, despite resurgence of COVID in some Western countries. I think generally the people are getting used to of living with the COVID fear, and that augurs very well because a large part of their sales actually come from overseas markets. And I think once normalcy comes back there, the upside from these levels could be immense. As it is, Tata Motors is a high beta idea always. It falls much more than the rest of the auto sector in a bad market and then goes up much more. It goes up equally well in a good market. So I think from here the upside could be very phenomenal. In fact, if the investor is willing to hold for longer than 1 year, then the upside could be much better. So I would suggest that certainly hold on and try and extend your time period beyond 1 year, because the full recovery might take some time, and the impact of that on the stock price may not happen in 1 year. So be prepared to hold it for longer for getting the maximum profit from these levels. But certainly, yes, from these levels, profitability could be immense, and I think the stock is very well poised to do well. In fact, one of the great ideas to buy if someone has a little bit of risk appetite, this can be a very good stock to accumulate at the current levels with a 2 to 3 year perspective.
Okay, great. Thanks for that, Ashish. So both of you quite upbeat on a Tata Motors, although it might take some time for the value to get captured. Let's move on then. Query 2 is on Ujjivan, and we have Kishore Ahuja of Chandigarh, who's bought 400 shares of Ujjivan at a price of 340 rupees per share. Please advise if I should continue to hold. Kunal, what would be your advice to him?
Well, my advice would be, would be to stock. I think it's still a stock which is struggling, even though the near-term trends have, emerged quite well for Ujjivan. But I still see the stock struggling. It's still below its 200 moving average. If you can shift, then I would advise that you can shift to similar stock from the space, but from a different variety. It's Shriram Transport. The stock is at 820, 825 plus levels. Would advise that as a buy, to be near-term targets to be kept at even at 900 plus levels for Shriram Transport, and stoppers could be kept at 790.
Okay, what are the fundamentals looking like for Ujjivan Financial, Ashish? If you could give your suggestion as well.
Well, I think I would say that the investor can hold on. The entire sector is going through a very lean phase because of COVID crisis. But Ujjivan, I think is one of the better managed ones. And the operating ratios are fairly robust. Company also has done fairly well in expanding and in kind of capturing various segments of the market. So I would not be in a hurry to book out of this stock. I think if the investor has time, stay invested. It's one of the better managed companies in this sector. Going forward with the kind of reform happening in the NBFC space, the sector would come back at some stage. And once the sector is in focus, I think Ujjivan would certainly be one of the ideas which would do well. So stay invested. Don't look at the current performance, because that is really affected by the situation at the ground. But going forward, I'm quite upbeat. I think the stock would do well going forward.
Okay, thanks for that, Ashish. On that note, a big thank you to you both for helping us out this morning. Let's now switch gears a little bit. RIL continues to rake in the moolah. The Public Investment Fund of Saudi Arabia has bought a stake in the retail arm of Reliance. The deal is valued at 1.3 billion for a little above 2%. So that takes Reliance's retail valuation up by around 7 to 8% from the previous rounds we've seen. So it shows that value unlocking continues in the retail business and at higher valuations. Perhaps that's got something to do with the way Reliance is performing today, but I mean, after that huge fall we saw earlier on this week, it was anticipated that there would be some recovery. So nonetheless, value unlocking continues at RIL. Let's move forward yet again to pharma major Cipla, which will also come up with its earnings today. Niche launches in the US are expected to drive Cipla's growth. The street will also be watching out for any updates on the inhaler products. My colleague Pankaj Podar now brings us a comprehensive preview. Over to you, Pankaj.
Cipla, of course, is one of the bellwether stocks in the pharma SPAC, and when we talk about the numbers, they will be declaring their numbers soon. So when we just talk about the results, 4,000 plus crores in terms of sales, a decent growth is what the street is anticipating. Margins in Q1 were slightly higher at about 24%, but that was not a normal quarter, so they'll normalize to around 21.5%. Remember, Cipla does margins of about 20%, so even 21 is a number which is decently good. It will be niche niche products that will lead to growth. Remdesivir, of course, is something which has been a part of the COVID treatment in India, and Cipla has been supplying it. So that, of course, will have an impact as far as their domestic sales is concerned, which is expected to grow by about 6 to 7%. But in Q1, there were, some one-offs, or, one can say some trend changes where you saw medical representatives costs really coming down, travel costs really coming down, overall OPEX of various pharma companies coming down. That has been the case with some of the companies that have declared numbers so far. So does that continue with Cipla as well? $155 million is the sort of sales numbers that one would be looking at for their US business. But more importantly, what is the update on the acute business here in India? Is India business ex-Remdesivir at a pre-COVID level? That is something which the street would closely watch out for. Overall, expect solid set of numbers. US will drive the growth with 10% growth. India is expected to do well, led by Remdesivir. And what do they say about upcoming drug launches is something which the street would eye out for.
All right, Pankaj, thanks for that. Definitely an important one to watch out for. But let's touch base with the management of GCPL. They delivered their numbers. The stock is trading quite lackluster following the numbers that they delivered. Let me just read you through them. Revenue came in at 2,915 crores. Profits also grew a healthy 458 crores. You had margin expanding as well quite a bit from 21.7% to 23.1%. We have Nisaba Godrej joining us. She's the chairperson and MD of Godrej Consumer Products Limited. Nisaba, thank you so much for taking time out and chatting with us this morning. Firstly, if you could start by talking to us about how the current demand trends are panning out. What would you say about how the consumption patterns have evolved in the pre-COVID era? Are we back in terms of sales to pre-COVID levels?
I think when it comes to demand, I think it's a bit broad-based to say pre-COVID levels. So I think we'd have to look at it more like which are the categories that have headwinds and which are the categories that have tailwinds, given that we are very much in a new normal and consumers, behaviors and what they're sort of buying has also changed. So for example, I think, and it's a well-known fact, products that keep you clean, hygiene products, soap, floor cleaners, sanitizers. Some of them have moderated from Q1, but we still see, very strong demand in them. And we see long-term sort of habit change. So if I give you an example of a category like hand wash, the penetration pre-COVID was 13%. The penetration now is 33%. And this is on an all-India basis. More interestingly, rural India has moved from a below 5% penetration to an almost 20% penetration in a category like hand wash. And I think some of these trends, will stay for a long time. Obviously, there are categories that we've seen, in personal care or skincare because people are not going out as much, which have definitely moderated, but hopefully sequentially, some of these will be coming back into demand.
We've seen a good improvement in margins as well over the last few quarters. So how sustainable is that trajectory going forward? And what's the company's expectation for the second half in terms of operational performance?
So our margins have been, quite high. And I think, in both India and Indonesia, very profitable businesses. We do see, more investment in advertising going forward. But we feel that the operating leverage that you get will help us maintain margins. But we will also be in investment mode. Our LATAM business is really corrected very, very strongly on a EBITDA basis, and we hope to see that continue forward. One area, obviously, of deep focus for us is our Africa business, and really bringing those margins up. But we are also in an investment mode for growth right now because we see lots of new opportunities for innovation and category building, like I gave you the hand wash example.
Right. Hi, Nisaba. You know that HI segment from a 27% growth in Q1 is down to just 4% in Q2, which is lower than your peers. So what impacted the growth and what is the trajectory for the rest of this year?
I think we were also a bit disappointed with our household insecticides growth this quarter. We did, quarter 2 and quarter 3 are more salient. So about 60% of household insecticides business comes from quarter 2 and quarter 3. And we did face a major supply chain issue this quarter with Guwahati being locked down for 21 days. So unfortunately, that was we did see supply chain issues in quarter 2. Our secondary sales were definitely much better than primary, and September and October are also much stronger than, especially August was a difficult month for the category. That being said, I think what we're seeing in terms of consumer demand is still strong because, this whole trend on health, I want to stay safe, I want to protect my health, that's still very strong. And we're also seeing opportunities like, in non-mosquito pests and like cockroaches and rats, people are much more willing to go into the category. So we're seeing category penetration increase. And I'm hopeful that in, the second half of the year, we won't have some of these supply chain issues, and where there've been slips, we'll cover them up.
Right, Nisaba. And coming back to what you said a little earlier, there's an increased demand for health and hygiene products. So is your company going to be expanding over here? And are you looking at maybe any inorganic activity via acquisitions?
So, I mentioned sort of last quarter that, we launched 40 new products. We've actually launched, a new brand called ProClean in India for floor cleaning and toilet cleaning. So I think the hygiene is a big focus for us, whether it's, in categories we've already played in, like in soaps in India or wipes in Indonesia. But we feel that there's a big opportunity now to build. Some of these categories actually were growing very fast even pre-COVID because the penetration levels were low. And now I think post-COVID, with the kind of education people have got on health and hygiene, we really feel that it's going to be very turbocharged. At the same time, I don't think you can win if you have Me Too products. I think your value for money in the Indian context or other emerging markets context, distribution. So I think all those are going to come to play very strongly in terms of who will win in the categories.
Nisaba, rural market or rural segment is recovering faster versus the urban part of it. How has the demand been for GCPL specifically? And if you could give us a sense on what segments are consumers currently looking at?
In rural, we're seeing growth broad-based across categories, right? Because penetration is rising. Like I mentioned the 4x penetration rise in hand wash. So obviously you'll see things like hygiene, household insecticides ahead of the pack in rural. But I think other categories, even like hair color and all, are doing really quite well. And I think some of it's obviously initially been driven by this reverse migration. But I think there's 2 strong monsoons, NREGA mandates are at 2x, the government's Kharif crop procurement, the inputs on the PM Kisan scheme, the Mudra scheme. So, I'm quite optimistic about rural growth going forward also. And obviously for a company in consumer products like ours, that is an opportunity to drive penetration in categories.
All right, Nisaba, great chatting with you. Thank you so much for giving us color on the demand trends and the way forward for GCPL. The stock price from trading completely flat at the start of this interview is now up 0.3%. Slipping into a break here. More updates when we come back.
Hello, welcome back to Buy Now, Sell Now. You know, it might not be the best performing airline in the country, but it definitely is the best performing airline stock. And I'm not talking about Interglobe Aviation or SpiceJet, I'm talking about Jet Airways, which has finally submitted a revival plan to NCLT yesterday. The stock has gone from 26 to nearly 80 bucks in the last couple months alone. We at ET Now had reported some of these details earlier about how new developments are emerging. My colleague Utkarsh Chaturvedi, who has accessed the revival plan submitted, takes us through the details. Utkarsh, how much money will the creditors get and what is the operational plan?
Two basic tranches of money which are being planned in the revival plan. The first one is an upfront payment which is around 380 crore rupees, which will be done upfront before really the operations start. That is one part of it. Then there will be a second payment which will be 10% free cash flows of the company in the year 3, 4 and 5. According to the current plan, that is around 590 crore rupees which will be given in 3, 4 and 5th year of the operations of the airline. Apart from that, 9.5% stake in Jet Airways, 7.5% stake in Jet Privilege Private Limited will be given to the financial creditors. Then, if there is any inventory upside, any aircraft and ATR sale, and it is above the book value, that will be also transferred to the accounts of financial creditors. Then, let's look at the operational plan. What are they really planning to do? Now, we had told this to you earlier as well that they're looking at a domestic, international and cargo where 777 planes which they own will be key in the cargo business. Other than that, they'll be looking to get the new generation aircraft. So, can be the A320neos, can be the B737s or any other aircraft, deemed fit for the services. And they've said that they will start looking for alliances and partners from day one. They'll be looking at new partners in the company. The starting they will be doing from a 6 aircraft. Then the idea is to add 1 aircraft per month. And in the next 5 years, the plan is to take Jet Airways where it was at 120 aircraft. That is the plan which has been submitted to NCLT. The creditors have obviously given a go-ahead to it. Now what we'll have to wait and watch is that does the NCLT approve the same or not? And remember, they're not only financial creditors, they're other creditors as well. Will they approve the plan as well?
Okay, Utkarsh, thanks much for joining us with those details. It's 11:45 on the clock. It's time to reveal our quiz answer. Just for the benefit of those who tuned in just now, we asked you this morning which of these chains dominates the Indian QSR market by revenues. Options being Burger King, McDonald's, Domino's and KFC. And the correct answer to this question is option C, Domino's. Slipping into a short break here. Before we do that, let me just read out quickly the names of our quiz champions as well. Divya Jyoti Gupta, Mukesh as well as Abhishek. Congratulations for getting it right. And thanks for all of the viewers who've been participating in the quiz. Slipping into a break, more updates on the other side. Stay tuned.
Hi and welcome back to Buy Now, Sell Now. As part of our investor education series, Nivesh Ke Funde, we're going to be looking at SIPs today, and they've become a part of our day-to-day language. But SIPs, as not many people know, are not only restricted to equity mutual funds. On this edition of Nivesh Ke Funde, we take a look at SIPs in debt funds. Let's listen in.
Avan, an often asked viewer query is whether investors should consider doing an SIP in a debt mutual fund.
Investors can consider putting their money into debt mutual funds if the roller coaster ride of equity funds is not for them.
In fact, investors could liken doing an SIP in a debt mutual fund to, say, doing a recurring deposit with a bank.
With one major difference, that returns from a recurring deposit may be guaranteed, but returns from a debt fund will be varied.
Well, that's true, Avan, because debt funds invest in corporate bonds, in commercial papers, government securities, other debt securities, which do tend to carry some amount of risk.
While the risk is definitely more than that of putting money in a fixed deposit, it's sizably less than investing in equity mutual funds.
But just like in equities, Avan, an SIP in debt assets too can help you ride the volatility in the debt market.
So if you're a risk-averse investor but still want to invest invest in a different class other than a bank deposit, then consider putting your money through an SIP in a debt fund.
And that's all on this edition of Nivesh Ke Fund Day on Times Network. Thanks for watching.
With that, we're out of time on this edition of Buy Now, Sell Now. Thank you so much for tuning in.